Welcome to Ask the Expert, an award-winning daily series, from 8:30 to 9 a.m. to help small businesses. Ask any questions in the comments or use the hashtag QBAT on Twitter. If you need any more advice, please do join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. During the live session today, we will be running a poll, so please do engage with it and I will reveal the results at the end. So thank you so much for joining me again. My name is Eriona. I am the Managing Director of Majors Accounts, which is a small family-run accountancy practice, based in South East London. A bit of background from me. So I am a qualified chartered certified accountant. I have a master's degree in accounting and finance and a master's in law in international banking and finance. And I have recently finished a postgraduate diploma in strategic finance from the University of Oxford. I am also a member of the QuickBooks Accountants Council and a member of ACCA's UK Practitioner Network panel and an ACCA SME Global Forum member. So I've been working in practice now for the last 13 years or so alongside my studies, which has been great in helping to ensure that I get to really enhance my studies backed with that experience from small practice, where you get to see everything, how business works, how it functions, its pain points. You get to see the journey of growth, of them trying to get more profitable. So in terms of Majors Accounts, who are we? As I mentioned, we are based in South East London. We provide support to mainly the SME businesses in the SME space, so whether they're owner managed businesses, self-employed or limited companies. We have clients in a wide range of industries, namely construction, hospitality, IT, financial services, pubs, bars, restaurants, hairdressers, and so on. So since becoming managing director of Majors Accounts, I've spearheaded and implemented a digitalisation strategy within the business with the idea of becoming a paperless office. Proud to say that we are also a QuickBooks online practice, so we've become somewhat experts on QuickBooks Online now. So with us, everything can be done online using an array of really amazing technology and apps which all feed into QuickBooks. And it's created an elevated experience, not just for our clients, but for our staff as well, because they're using cutting edge technology to help make a difference to our clients' businesses. Now clients don't need to come to the office any longer, so there's obviously a convenience there and time saving, and it allows for our national and soon to be international reach. So we have clients from Ireland all the way to the Isle of Wight, and the idea of the digitalisation process was to bring the accountant-client relationship closer. And as we are a family-run practice, we do try to treat our staff and our clients like family where we can, because we found that it builds a great rapport and the relationship is a lot more successful and fruitful. And it also helps to provide a more personalized service. And with the adoption of technology, we help to bring that relationship closer and strengthen it. Now, during this time, our work hasn't gone unnoticed. So we've been nominated for quite a few awards. So Majors Accounts has been nominated for the last 2 years in a row at the British Accountancy Awards for Independent Firm of the Year Greater London. I have also been nominated for Top 50 Women in Accounting and for 3 awards by the Women in Accounting and Finance Awards 2020. Now, at the moment, obviously, the COVID situation, pandemic globally has had a huge effect on businesses. Many have had to close. We saw the economy shrunk 20% in the UK during April. We have seen official figures now that from July to September, this increased by 15.5%, which is encouraging. However, obviously, we've gone back into lockdown now for at least 4 weeks. And businesses have had to close again. Some do not know if they're going to be able to kind of go back to, if they're going to have a business to go back to. And there have been a number of schemes that the government obviously have introduced, and they have updated these recently, which I will go through right now, namely the Coronavirus Job Retention Scheme. So the Prime Minister announced that the Job Retention Scheme, commonly known as the furlough scheme, will be extended until December, so the 2nd of December, with employees receiving 80% of salary of their pay for hours that they have not worked. It will be up to the employer if they want to top that up or not, but they're not forced to. And obviously, this was welcome from the previous months where it went down from 70 to 60%. Obviously, it's not great that we've had to close again. But the job support scheme that was announced previously has been scrapped for now. It may be reintroduced after the Coronavirus Job Retention Scheme stops, but we'll wait to see regarding that. There is also, during this time, the opportunity still for flexible furloughing, so whereby employers can bring back employees to work part-time, and employers will have to pay for employees the hours that they are working, and they can still use a scheme to cover any normal hours where the employees are furloughed. To be eligible, and this is something that we've had from a lot of our clients, to be eligible, employees must have been registered on their payroll by midnight on the 30th of October, which is when the announcement was made. This means that the real-time information submission, which notifies payment in respect of that employee, must have been made to HMRC on or before the 30th of October. So if they weren't submitted by that date, so if HMRC did not know, then they won't be eligible, unfortunately. Neither the employer nor the employee needs to have previously used the scheme, so that you can start from fresh if you're claiming it for the first time. And how is it going to work? So the claims did start, they opened up from yesterday, so you can claim in advance or in arrears for the period of 1st of November to the 11th of November, and they have to be for at least a minimum of 7 days. And claims relating to November must be made by the 14th of December. There have also been a number of cash grants introduced, so businesses in England that are forced to shut as a result of lockdown will be eligible for grants of up to £3,000 per month, payable every 2 weeks. Businesses will be eligible to claim after 2 weeks of closure, and the amount they will be able to claim from their local authority depends on their rateable value. So a small business with a rateable value below 15,000 will be able to claim £1,334. A rateable value between 15 and 51,000, you'll be able to claim £2,000 per month, and anything above 51,000 will be £3,000 per month. Now, the self-employed scheme as well has increased. So this was announced recently. It was going to be only 40% of profits. Now it's gone back up to 80% for November to January. There will be another batch of payments that will be made from February to April. That's something the government will review closer to the time, whether they're going to keep 80% or whether they will reduce that percentage. We'll see. There is obviously the VAT deferral, which was announced previously. So anyone who deferred from March to end of June, I believe, could defer their VAT payment to be paid by March 2021. It's been announced that these can now be deferred further to be paid, extended to March 2022. Where you will be able to pay in small installments. So that's another help with cash flow. Something else to think about during this time. I know we've all been clouded by COVID, but another massive issue going on at the moment is Brexit. Many businesses have kind of forgotten about this and checking whether they're still going to be able to operate as normal come the 1st of January. So you really should have set up preparations. HMRC is writing to 200,000 customers, informing them of the new tax rules, and there will be no extension for the transition period. So firms must act now, and there is no time to waste. So whether we end up with an Australian or Canadian style trading arrangement, you still should go on the Gov website and find out what you need to do for your business, just in case you won't be able to continue trading as usual if you were outside of the UK. So I'm going to have to start taking questions now. I see them coming in. We have a question from Fiona from Twitter, who says, we've used our learnings from the first lockdown to stay afloat in the current environment. What should I proactively invest in to keep my business strong for the next 6 to 12 months from now? Okay, I mean, if you've used the learnings, I'm guessing the changes that you've put in place should help long term. I don't know whether that's helped you provide a new service line for your business, and whether that's something that you can keep whether we come out of lockdown or not. Um, if I don't know what your cash is looking like, but there are a lot of schemes like the C-bills or the bounce back loan to give you some kind of security to keep your business afloat for, say, the next 6 to 12 months. And a lot of these are interest free. What I say to a lot of people is, if you're able to get the bounce back loan, and you can, with the bounce back, it's really simple. It's a 5-minute application. You can get up to 25% of your turnover for based on the previous year's figures. And that's something that you can choose to hold in your bank account for 12 months. You may not need it, but in case you do, it's there. You're not going to incur anything. After the 12 months, you can pay that back and not incur anything, basically, any costs. But what if something, an opportunity comes, comes your way, and you're able to invest in something that can grow your business exponentially? You will have the funds there available. So I think that's something to look at. Gives you slight peace of mind to make sure that you're able to keep up with your expenses. Plus, if after the 12 months you want to keep that loan, the interest rates are pretty low. It's at 2.5% compared to business loans that you would have got previously. So maybe something to look into. We have a question from Lee from Instagram, who says, I have 2 businesses, a stationery shop in my wife's name and a hardware shop. I have already taken a bounce back loan against my hardware shop. Can I apply it for another through the other business? So as long as the businesses are 2 different entities, so if one is in your wife's name, whether that's in self-employment basis or limited company, and the hardware shop is in your name, then you can apply for a bounce back loan for both shops individually. And even with the previous loan, I don't know whether you applied for the full 25%, but we've seen a lot of people that only applied for how much they thought they needed, not the full 25% that they could get. This is your chance now. You are able to go back to the bank and top that up, so you do get the extra amount at 25%. But to answer your question, yes, you can get a bounce back loan for both businesses, as long as they're separate entities and they're not all under one business or one limited company, for example. We have a question from Ivan from Facebook, who says, how should we approach employees who are building up to return to work but will now have to stay furloughed? My business is not back to normal and I want to make use of the support that I'm getting from this scheme. Obviously, the furlough scheme is great, and if your employees have been furloughed up until now, this month, obviously their pay will increase because they will be getting the 80%. A lot of people have been worried about going back to work, because if I've spoken to some people, they haven't been in work at all since March, and for them to come back full time is a really scary and daunting thought. So encouraging them, maybe, I don't know if you're able to open up at all, and try to encourage them to come back a few hours at a time, whether it's 1 day a week or maybe just a few hours a week, just to get them back into the groove of working and get them used to that discipline and that mindset, because it is a massive transition for anyone to go through from not working at all to then working full time. I would say you can also send them, depending on the type of business, keep in contact with them, send them things like that they could use as training whilst they're off, to help sharpen up their skills. For that, they don't have to be off furlough for that. You can send them materials or send them on courses, although there won't be any courses, I imagine, now, but something just to keep in contact and help them, remind them of the things that they're going to have to come back to, and their skills that possibly, they're not going to be as good as they were in March. So something to help out with that, I think, would be a good idea. We have a question from Dorothy from Instagram, who says, please share some advice for newly self-employed people like me who are not eligible for the self-employed grants. So those who were newly self-employed didn't fall under the self-employed scheme, as you've mentioned, which was a real shame, because a lot of people taking the plunge to go self-employed and kind of make something of your own takes guts, and then to have this happen, it kind of destroys all plans that you had. So apart from that, you can have access to universal credit, which is not significant, but it's something. And although the bounce back loans and the CBILS loans are not something that you would necessarily have access to, you may still be able to get normal loans for your business to try and keep you afloat, as long as you've got all the right figures and you have an accountant, what I've found, to help you with that, you'll be a lot 4 times more successful in obtaining finance. Something just to keep you going until we're out of this. So that's some support. Other than that, there's not much else available other than those two. Just looking, I guess, at ways that you can also carry on with your business, maybe online. A lot of businesses who thought that they never would be able to go online have been forced to during this pandemic, and they've actually found that it's probably going to be their main source of income going forward. So maybe something to look into. We have a question from Maeve, I hope I've pronounced that correctly, from Twitter, who says, "Hi Eriona, thanks for all the updates on the support scheme. Can you also share some tips and best practices for keeping a strong cash flow?" So in terms of keeping a strong cash flow, I think the thing that I advise all my clients, the first thing to do, look at what you can defer for the time being. So when the pandemic first hit, what I advise, and something that can happen now as well, speak to your suppliers. If you have rent to pay, speak to your landlord, and just negotiate different payment terms. For some, what we've mentioned is, say, to not pay anything now, defer payment, say, until a few months or up to a year later, but you can pay the full amount at the end of the year. So that will help your cash flow for right now. Look at your suppliers, see what do you need and what you don't need. If you have supplies, so depending on the business, I know that there's some businesses that they could go back and refund some stock, for example, for the time being. That will also help with cash flows. Access to all of the grants and loans, which I would really recommend. We've been helping our clients a lot with the CBILS loans recently, which have now been extended to January. So there was a deadline for November. This has now been extended, so you still have time to apply depending on what your circumstances are and if you qualify for the loan. But these are all things that I encourage everybody to take in terms of, you've got a year to decide. If you feel that you can't afford to pay it back after a year, pay it back just before. At least you would have had that money in your account for just in case. And depending on what's going to happen, because although we may be coming out of lockdown, there's obviously talk of a new vaccine, so we could be out by January and things could go back to normal. But what if they don't? Make sure you have that backup just in case. We have a question from Adrian from Facebook, who says, "There's no guidance on the government website regarding redundant staff be put on furlough while maintaining their redundancy. Have you heard anything or expecting any updates regarding this?" No, so if someone has been made redundant and they won't really, as far as I know, they won't be able to be on the furlough scheme as well. What has happened is where HMRC have said that if you have let some staff go, and the scheme has just come back around and you think you can afford to keep them back on for that little while longer, you can reverse that and bring them back in employment and put them on the furlough scheme, as long as they were employed for you by you previously. So that's something that you can do, but as far as I'm aware, you can't do both at the same time. You can bring them back, but you can't have the redundancy and the furlough, unfortunately. We have a question from Brienne from Facebook, who says, "Can I pause repayments for my bounce back loans for some time and continue again when I'm in a better financial position? Will that affect the interest that I need to pay?" So with the bounce back loan, you don't actually need to repay anything at all for 12 months from the date that you have received the bounce back. After that, you will have to start making payments, and as far as I know, there isn't an option to defer those payments for now. There was talk of possibly extending it from the total 6-year period to 10 years, which would help out a lot of businesses with that cash flow, because payments would obviously decrease, but that's not 100% yet. That's just hearsay, shall we say. But for a year, at least you have that year of not having to pay anything back at all. And if you're planning to start paying back within a year, I would kind of question, why would you want to do that right now, seeing as times are so uncertain? Unless obviously you're doing really well and you see yourself not needing the bounce back loan, and you want to just get it out of the way. But generally for the year, you don't need to pay anything back. We have a question from Sylvia from Facebook, who says, we have some work, but we don't think we can guarantee 20% of usual hours every week. Can we still use the new furlough scheme? Yes, absolutely. So the furlough scheme is to cover 80% of the pay for the hours not worked. So if you're only able to have work available for staff for 5%, 10% of their usual hours, then that's fine. You pay them for the hours that they're actually working. The government will subsidize the rest, but obviously only 80% of that pay. You have the option to top that up, the 80%, but you don't have to. And it's still quite a good scheme because it ensures that you can still keep your staff who may be experienced, know the ways that your business works, and they're vital to the running of your business, whilst making them as happy as they can be in getting the majority of their pay. And a lot of staff have welcomed this because of the fact that it's so difficult to find a job right now. So many are worried about losing their job. So this gives them peace of mind and gives you peace of mind. So when you do go back to normal and you're able to offer them the usual hours, you know you have them there. They're still your staff with the experience that you've handed to them over the years. So we have a question from Johan, who says, hi, do you know when we can expect to learn more about the £200,000 customs and tax rules from HMRC? So I'm guessing you're referring to the Brexit changes. They are on the Gov website. I can't remember. I think it was the gov.co.uk/transition. Don't quote me on that, but I think that's the website. You can go on and kind of go through all of the questions and find out whether you're ready for the changes. And if you're not, it will give you guidance on what you need to do before the 1st of January to ensure that you're ready for all the changes. It is still going ahead, but because of everything that's happened, many businesses have just paused and they've forgotten about it. But this is something that's really important. You may not be able to trade as usual. You may need to check your insurance. You may, depending on what you provide, if you provide services outside of the UK to the EU, are you going to be recognised from the 1st of January by EU law to provide certain services that you are providing at the moment? So there are a lot of things to do, but that website will help out with in preparing you. Basically, we've only got 6 weeks, over 7 weeks or so, till the changes come in for Brexit. So I would really encourage everyone trading with the EU to go on to the website and have a look at that. We have a question from Laura from Facebook, who says, I have an e-commerce platform and working on getting all things in place before Brexit. What would happen if I don't have it all in place before 1st of January? It's all a little bit confusing. So it is confusing for many people. They have said that there will be a transition period up until July. So the transition will happen in stages. But I would say that if you have been working on getting things in place, you're probably nearly there. The website will help out with any things that you have left over. There will be a number to call as well if you're not sure. Your accountant could also help out just to review what you've done and whether there is anything left that you need to be doing to ensure that you can still trade. I do foresee there will be a lot of confusion as soon as this comes in place. So it's going to be the same thing for businesses that you're trading with in the EU as well. They're not going to be sure of what they can and can't accept and how they can work with you. So in terms of that, there may be some kind of leeway because of them not understanding as well, until both parties understand what's going on and get into the groove of what should be done. But definitely have a look at that website. I have a question from Letitia from Facebook, who says, hello, what's the difference between bounce back loans and CBILS? Is one of these better than the other, and can I apply for both? Okay, so you can't apply for both. The bounce back loan is only up to £250,000 and you can only take 25% of your turnover. As a scheme, it's really easy to do. It only takes 5 minutes to apply, and you could get the money within days. And with that, there's a fixed interest rate of 2.5%, and you don't pay anything for the first year, and you start paying a set monthly figure for up to 5 years after the first 12 months. The CBILS, it differs because it's up to 5 million, and this one is a little bit more difficult to get, but we found that our clients that have larger turnover, this is the one you should be going for, because you can get a lot more from this scheme. The only difference is with this, again, you don't have to pay for 12 months. The difference is that the interest rates are a lot higher. There are a lot of organizations like Funding Circle, Starling, a lot of places that are providing this, but we've seen interest rates from 6.6% to 10%. But it is worth having a look at them, because as I've mentioned, you keep it for 12 months. If you decide that you don't want to use it, you pay it back. So I have one last question that I can take, unfortunately, and it's from Agatha from Facebook, who says, is the eligibility of the self-employed grant based on my monthly earnings? I have 2 projects in the pipelines that are due to start in December. My earnings will increase from January onwards, but I still want to apply for the grant. So the self-employed grant will be based on your last submitted tax returns, and the profit that you've got declared on those tax returns. It won't be from your monthly income recently. So if you've got your 1920 tax return submitted, which may show a healthy profit, then that is what will be used, but it can also be an average of the last 3 years tax returns as well, but it won't be what you're earning at the moment. And even though you will be starting to work from January, you will still be eligible for at least November and December of this scheme. Now, 7,500 is available for the full 3 months, but if you're only going to be being affected by this pandemic for November and December, then you'll only claim for 2 months worth. So it'll be 2.5 for each month. January, I'd recommend don't claim, because HMRC will come back to you at some point, and it can be within 6 years, and they will want to see how you were affected by the coronavirus during this time. And because it's a self-declaration, so they will want to see your bank statements. And if you start earning income, I would say don't apply for January, but obviously if you start earning at the end of January, then you have some leeway to apply for the full 3 months. Unfortunately, that's all I can take today. We have the poll results in, and we asked you, is your business prepared to survive the second UK lockdown? 53 of you answered yes, 53% answered yes, and 47% said no. Although 47% is still a large percentage, I'm encouraged to see that 53% have said yes. This means that during the time that they were locked down the first time, and when we opened up slightly, you've been focused on trying to make sure that your business is ready in case of a second lockdown. But something to think about as well going forward, maybe these new ways of working should mean that you can have almost a new service line going forward, and maybe you found a completely new way of running your business entirely that may be better than what you were doing previously. For those that have said no, I would encourage to really look at your operations and see where you can work in a different way, where you can go online, because this is the future anyway. So whether you get there now or later, I foresee we're still going to have to, everyone will have to be there at some point. So really focus on which areas you can automate or get online, whether it's if you're selling things online, you don't have to have a fully fledged website. Barriers to entry for taking payments online are not very high. The costs are not very significant. So I really encourage you to look into that and speak to your accountant, because you never know how they can help you. So thank you so much for all the questions. If you have any more questions, then please do get in touch with the QuickBooks support team or myself via LinkedIn, Instagram, Facebook, or Twitter. We're on all platforms. You can get in touch with me directly at eriona@majorsaccounts.com, or you can speak to us through our website. We've got live chat on our website. We also update news as it comes out on our news section of the website. And we also have an amazing app which, you know, we have loads of information coming out every single day almost, with the latest changes and ways that you could make changes to your business as well. So do have a look at that, and you can download the app from our website. Now, coming up on Ask the Expert tomorrow is Ketan Makwana. Ketan is the founder of Enterprise Lab, which has its operations in 26 countries and has won numerous awards for its cutting edge approach and results. Tune in to get some insights on strategic management for your business. A reminder that if you need any more advice, please do join the official Intuit QuickBooks SMB community group on Facebook, where accountants and business experts are on hand 24/7. I've really enjoyed answering your questions this morning, and I hope you all have an amazing day.